On this episode, I warned you, when CRA comes knocking, it won't be my fault. And there's people flicking low balls everywhere. What did I just say? This real estate stuff is not easy, so send me your questions and I will answer them. This is the Ask Jason Show. Hello everybody, my name is Jason Piercey and this is episode 19, the real 19. If you watched the last one, you saw I'm already gone way past things. 19 of the Ask Jason Show. If you saw the last one, Joe's smiling, he knows what I'm talking about. I said it was 19. It wasn't, it was 18. Late one night while editing, Joe messaged me and he said, dude, we were wrong, or I said we were wrong, whatever happened, and we decided it would be funny to just blatantly overdub what I was saying. And I even stumbled across trying to make my fingers represent 19 accurately. I even went back and said, okay, I'm gonna play it, like I'll say it, and I'll record it and I'll send it to you, but I'll do it like an old dude who's like half English, like the university professor who thinks he's from England, but he's from like Burgio, or like that kind of thing. This is episode number 18. So it was really funny. If you haven't seen episode 18, you should watch it. Anyway, this is episode 19, the real 19. 2 questions. I'm going to do this one first because I think it's super important. There's new CRA taxation rules for the sale of a property, of a principal residence, and they're going to have a big impact on anybody who sold their house in 2016. And now moving forward, unless there's another change in Parliament that negates this. And the question is, how does this affect me? And here's the most real answer I can give you. I'm not your dude for this. I'm going to hire an accountant to do mine, so you should hire an accountant to do yours. Here's the reality. They're taxing the income tax on a sale of principal residence to principal residence to a higher degree than they would have previously. And not only are they doing it, it's no longer that you can not file that and nobody will notice. They're actively going to come look for you. Like, I'm going to say that again. This is important. They're going to come look for you. So if you sold a house last year, tell your accountant, put it in your taxes, or you're going to get a very unpleasant surprise when your notice of assessment comes back. But I'm not the guy. Don't call me. This is not advice. Like, I'm not the person for this. Call your accountant, not me. So my professional opinion is, ask a professional. I'm so warm already. Okay, question number 2. The question came from a client of mine, actually. How much should I offer? And what they're referring to is under asking price, because everybody sees our market right now, and it's true, as a buyer's market. But what a buyer's market refers to is actually the absorption rate. So if no new houses went up for sale, and all of the inventory, all the listings didn't change, the same number, and people continued to purchase at the same rate that they're purchasing now, the absorption rate refers to how much time would pass before all of the houses were sold. An absorption rate that is above 5 months, so 5 to 7, somewhere in there, that means that you're in a buyer's market. That's all it means. It's a technical definition that means it will take longer to sell all current inventory because of the amount of inventory versus how much time it takes to sell. That's all it means. So how much you should offer on a property is not reflective of whether or not you can statistically call it a buyer's market. What you should offer on your property is based on what the real market value is, not what the asking price is. I've listed houses in this market that sold for $58,000 above asking because that was to look on Joe's face, that happened. I'll tell you that story. Because our marketing campaign for that was designed around that being our expectation. Other people will test the market and they'll put their house, if this is their value, they'll ask here, giving themselves some negotiating room. That's another tactic. It's not one that I use. I don't think it makes sense. I like to price things at the price that they should sell for. The real value, right there. So if somebody wants to write on one of my listings and offer $25,000 under asking, that doesn't make sense. Now, I know you think everything's selling under asking, but you're making an assumption that everything is priced with the same level of expertise and the same marketing strategy. That's not the case. When a buyer of mine wants to buy a property, and they say, how much should we offer? Like, where should we start? I don't care where you start. What matters to me is that we are of the same opinion that if a house is asking $399 and it's actually worth $399, then I'm okay with you paying $399. Because I did my due diligence and I did my own competitive market analysis to see what the property is worth. How much should I offer? You should offer enough to get the house that you want that doesn't negatively affect your family's financial future. Because there's a cost of loving something when it comes to a property. And yeah. So you don't need to write ridiculous lowball offers. Only write ridiculous lowball offers if the house is overpriced. I said house again. Costco coffee. Breakfast blend, it's good. Costco is not paying me. Wouldn't that be great? Those are the 2 questions I have for today. That is all. Thank you very much for tuning in, and we will see you. What are you laughing at? Do you have something to say? We will see you next time. The Ask Jason Show exists so that you can make informed real estate decisions that are in the best interest of yourself and your family and your future, and you get information from a resource that you can trust. Now, speaking of trust, here are some people that I would trust my mom to work with, because for me, that's the litmus test right there. Good enough for mom, good enough for everybody.